I want to talk about Enphase Energy, ticker symbol ENPH, which I think can double in a year and could also go 10x in the next 10 years. Hello, and welcome to WealthWise. My name is Rohit Adukia, and I'm the founder of WealthWise. I started WealthWise with the intention to make it easier for retail investors to follow financial news focused on the US markets. Today, I'm launching WealthWise Research, where I'll be sharing proprietary research on stocks that I like. Please take note that this is not financial advice. I would encourage you to go and do your own due diligence before buying or selling any equities. In my first WealthWise research publication, I want to talk about Enphase Energy, ticker symbol ENPH, which I think can double in a year and could also go 10x in the next 10 years. My style of investing is what I call venture style investing in public markets. And I'm looking for secular themes that can grow 10x and even 100x in some scenarios over the next few decades. As part of the process, I identified renewable energy as a critical commodity given that fossil fuels are killing our planet. Today, we already have the technology to be able to provide renewable energy 24/7 with a combination of solar, wind, and nuclear. And while I'm bullish on all three of those, today we'll be talking about solar. So, what does Enphase Energy do? Enphase Energy is a microinverter company. It's a company that makes microinverters that go behind solar panels. Microconverters convert the DC current generated by the solar panels into AC current, which can then be used by everyday home appliances. The other way you could be doing this is using something called a string inverter, which is what companies like SEDG and Tesla provide. The benefits of a microinverter over a string inverter is that when you install a microinverter, each solar panel is generating and inverting electricity at a solar panel level. So if any of your other solar panels stop working or for some reason have some shade on them and things like that, rest of the solar panels will still be working at high efficiency and creating electricity for you. The issue with a string inverter is that all the panels in your solar installation is connected to one inverter, and therefore if the electricity produced by any one of the panels drops a little bit, it will lead to a drop across all your panels. So for example, if you have 20 panels installed on your solar roof and any one of those panels gets shaded by a tree by 50%, then all 20 of your panels will be working at a 50% efficiency, as opposed to an Enphase Energy solution where that one panel will produce 50% of electricity, but the rest of the 19 panels will still be performing at max efficiency. So thanks to the green energy transition, solar is here to stay. And if you are going to install solar, it is an absolute no-brainer to install microinverters in your solar panel. Now that you know what Enphase Energy does and some of its competitive advantages, let's talk about the recent stock performance. As you may have noticed, the stock has underperformed recently. The stock is down 5% YTD, about 24% over the last year, but over the last 5 years, the stock has returned 715%. So let's talk about why solar stocks have been suffering of late. For Enphase Energy stocks specifically, there are a few reasons why the stock has underperformed and the company's growth has stalled. The number one reason is interest rates. The Federal Reserve has been on a historical rate hike path, leading to interest rates that we haven't seen in decades. Installing solar is an expensive affair, and a lot of it is done on credit. So when interest rates go higher and it becomes harder to borrow money, a lot of people would put off making such expensive investments to a future date when the interest rates might be lower again. This is one of the reasons why solar has suffered in the last couple of years as the global central banks have increased interest rates. The other big reason that is affecting Enphase Energy is NEM 3.0 in California. NEM 3.0 is a measure that was passed in November 2022. The critical issue with NEM 3.0 is that California solar customers who want to sell electricity back to the grid are getting paid 75% less than what they would have gotten paid under NEM 2.0. This in turn has led to slower installation of solar in California, which is one of the largest markets for solar infrastructure. However, NEM 3.0 is also not that bad. If you install a battery along with your solar panels, then instead of selling the energy back to the grid, you just end up using that energy at a different time, and therefore the whole thing turns out to be more positive for you. What makes it even worse is the real estate market. As you know, with interest rates going up, the real estate market has been in a terrible shape. And if you're not buying new homes, you're likely not installing new solar panels. Solar panels is a long-term investment. If you are stuck in a home where you're just waiting for interest rates to come down before you move into your new home, then you're not going to install solar panels and you would rather just wait it out. So all these factors, the NEM 3.0, the interest rates being high, and the real estate market are all affecting solar in a really bad way. And we might be at the trough right now. We might literally be at the bottom for Enphase Energy, and the next steps could start moving higher. And some of that is visible within First Solar. However, that is a different story with a lot of China plays, one of the reasons why First Solar is doing so well recently. But Enphase Energy will likely be next in line. Now let's get into a little bit of the earnings and valuation for the company. Enphase Energy is currently trading at a forward multiple of 43.02. And going into 2025, that multiple is expected to drop to 24.49. It's not cheap. But PE ratio is often not a great timing tool. So you don't want to decide when you want to buy and sell a stock based on just the price to earnings ratio, because it doesn't take into account future growth and what could happen in the industry. And as I have already explained, that we are going through a particularly bad time for solar, and it might shift in the next 6 to 12 months. Another positive to note for Enphase Energy is the earnings comparisons are going to get better going into the second half of this year. Enphase Energy started underperforming on a year-on-year basis in Q2 2023, which means going into Q2 2024, those comparisons are going to start improving, which should again lead to a better year-on-year score, which should take the stock higher. Solar stocks have already started moving. There's been a lot of news in this space which is taking these stocks higher, and I'm going to cover some of these news articles with you right now. One of the big factors that is affecting solar panels right now is the tariffs that the Biden government has put on China imports. Honestly, this is a really good deal for First Solar, which is trying to sell solar panels, which is what has been hard to do given the dumping that Chinese companies are doing in the US markets. But relatively, it's not that beneficial for Enphase Energy. Having said that, if overall solar panels go up, solar sales go up, solar installations go up, that will eventually affect Enphase Energy and benefit too. The other big news in solar is that even China came out recently and said that they are going to be cracking down on sales of solar equipment and materials at below cost prices, according to Bloomberg report. And the last piece that I want to talk about in terms of news flow is that nuclear and grid level companies are already being linked to artificial intelligence energy needs. And solar is likely going to be a big part of that conversation soon enough. I think nuclear will also be a big part of that. In fact, so will wind. But solar is going to play an outsized role in driving renewable energy resources for the growth of AI into the future. And a lot of people have not made that connection yet. You can see a lot of these large grid companies like Quanta Services have gone up like crazy in the last few months, but not so much for solar yet. The only solar stock that has actually caught fire is First Solar, which is up 42% in the last 5 days, 52% in the last 1 month, and 79% in the last 6 months. Apart from that, there are also a few Wall Street upgrades that I want to take you through. Barclays believes that the worst is behind Enphase Energy. They have a $134 price target on the stock, raised from $115. In February of this year, we also saw some insider buying from the CEO of Enphase Energy, which speaks well for the stock. So there you have it, one of my favorite stocks in the renewable energy space. It makes microinverters that go behind solar panels and make them more efficient. The trading at a PE ratio of 43 for this year, expected to drop to 25 next year and 20 in the year after that. The stock price has suffered in the recent days for three primary reasons. The high interest rate environment, which is now expected to take a turn over the next 3 to 6 months. NEM 3.0, which should also start improving as homeowners start buying energy storage solutions along with their solar panels, which should make the entire investment more efficient. And the third, which is the real estate market, which is also expected to turn over the next few months. The tariffs on China is going to be a tailwind for solar going into the future. The sentiment is troughing, and as Wall Street makes the connection between renewable energy, solar, and AI, we are very soon going to have an outsized run in solar stocks. First Solar has already started showing us that. Is Enphase Energy going to be next? Thank you so much for listening. And if you liked what you heard, please like and subscribe. Now let's go make some money.